Hey everybody, good afternoon. Neil here with Simpler Futures. It is Wednesday, Jan 3 of the new year 24, and welcome back. In this case, new week, month, and year. And since we do have a new month, we'll have non-farm payrolls here at the end of the first week in 2 days, this Friday. And frankly, that's really what matters next. I say that because the Fed minutes were released today, and they showed largely kind of looking at rate cuts, but yet the path at which was less certain. Market responded a little bit negatively to that, as you can see, going out near the lows on the day today. So the next and important thing will be the payroll report, and for the market to find some footing, support. It would be my opinion that you would not want to see a very strong report. Market's looking at 7 rate cuts, pricing in 7 rate cuts beginning in March this next year. So pay attention to the Fed Funds, the watch tool on the CME website, and watch the probabilities as in a percent terms that are priced in for each of the Fed meets, and how those percentages are positioning as the days and weeks go on coming into that March meet. I say that because it was not long ago there was nearly 100% priced in probability for the first cut on the March meet. However, that was down today to as little as like 70%, 69 or some odd percent, something like that. So priced in as lesser likely, still likely, but lesser likely than was previously for the first of what is anticipated, priced by the market to be 7 rate cuts in this new year. So we'll see. But anyway, plenty of time to worry about that. What we do have right this minute is, of course, the correction here from the beginning of the year, which you're looking at is a daily chart. And so that just shows a series of lower highs over the last couple of days, right? That's all it is, just a couple of days. But this move does pull back to the 20-period exponential moving average on the daily for one of certainly potential support. However, and I don't think it even matters, because nothing matters. My opinion, nothing matters with the payroll report at Friday. So here's what you just need to be, ready for, and that is, it certainly could continue further, and if so, where's it going? I believe I have an answer for you. I've got an alert right there for you at 47.10. I'll show you why in a minute. But if this is the low, then certainly we'd say, well, what would be an indication that maybe that is the low of the move and that does not go any further for now, at least for now, right? And that would be, you have to stop doing what you are doing, and that is making lower highs. We have to take out a trailing most recent, and in this case, lowest high, in order to end the one-time framing down, which would mean that tomorrow takes out today's high, or Friday takes out Thursday's high, or something, right, in order for this to be a low and start moving higher. Now, arguing against this being the low a little bit is the fact that big move up on the December the 13th, creates the way that it traded to, leaves thin single prints on the way up, which is the reason for the 10 target if lower, because that's the end of the single prints where it started, the ramping up. I can show you on a volume chart in a minute what it looks like. But anyway, next day comes in, finds boom, supported about 48, something like that. Comes back in next time, 40, call it 6, and then comes back in here today, about the same price. Well, that's traded now 3, maybe 4 times, right? So enough already. If that's good, then you would imagine that it would, kind of price would reject this level, i.e. bounce, much more definitively and not continue to trade the level, creating weak structure because it's traded on more and more volume every time it's traded, which creates more and more acceptance at a price, which leaves it more vulnerable for a further extension of lower to find support. In other words, this price evidently is not cheap enough, or it would have rejected this and bounced. If it's not cheap enough, then the next question is, well, what is cheap enough? And that has to be lower. So now let's switch screens and go show you what I promised is the why behind it. All right, so here we have a volume screen that's showing the same information, right? You go lift off on the 13th, come back in and check, and then check again today, same price, the 40, call it 6 level. But what happens if below that, we'll go to the profile here, the tan color on the background, that's the actual profile. You can see that it's very thin, all the way from 46 down to 10. And so anything tomorrow, or I guess Thursday, it doesn't matter what day, tomorrow or Friday, but anything below today's low would slip into that series of single prints, and it would be anticipated at least that would be a very swift break in price to 10, which is a point of control on a series on a session back here that would either yes or no be support. I would anticipate it would be indeed yes. The answer is yes, because the slip and break to that level would be for the purpose of cleaning up these single prints. So anyway, long story short, if lower than today's low, it trades 10. The way that we would almost find, to be pretty amazing, actually, if today's low was low enough. I say that because, remember, it's traded quite a bit, and one would have to wonder why would it continue to trade such a price if such a price was cheap enough to be support. But either way, that in the other scenario that is potential support, it would have to reach up and take out today's high in the one time framing lower, start the next then move higher, which would be T1 48.19, and then T2 a new high for the move that is above 41. So T1, well, the trigger would be breach of today's high. T1 would be 48.19. T2 would be a new high for the move above 48.41. That's it. I mean, that is that's line in the sand. That is target if lower, which looks like it's probably the case, before higher. But higher is still the idea. Even if it goes to this 10 level first, higher is still the idea. In other words, that's just one quick break for the purpose of cleaning up some single prints, find support, and then trades higher. So it either goes higher after lower first, or higher immediately by showing you that it's taking out today's high and working towards T1 and T2 that I just mentioned. That's it. Pretty simple, straightforward. Hope it helps. Good trade. Welcome back. Happy New Year. Next thing that matters, because Fed minutes are behind us, is payrolls, and that's Friday. So get ready for that. Take care.
Without simpler trading, I could not have financial independence.
This is one of the best investments I ever made in my life.
It's helping me find consistency.
It's one of the things that won me